Yes, good afternoon, traders. I hope you're all doing well. Welcome back to Traders Hub YouTube channel, where we post trading educational content and weekly technical analysis. As usual, with you is Mali Mathman, head trader at Traders Hub, and today we are going to continue with episode 4 of Introduction to Forex Market Full Trading Course. And in our last episode, we dissected market structure and price action, but unfortunately, due to some glitches and specifically on our mics, most of our viewers have requested that we redo the market structure part. And for that reason, let's not waste time and jump into the charts. Yes, if you all remember, we discussed what really price action is and why is it the market's language. Yes, earlier we discussed that multiple candlesticks is what builds what is called the price action. And price action is just raw data price, it's unbiased, and it's just price. Then as traders, we apply technical analysis by analyzing patterns, footprints, structures, indicators, fundamentals, and etc. And we become biased towards price or we become biased towards a certain direction, be it bearish or bullish, or by forming an opinion whether the price is expensive or cheap. And by being expensive, we look to sell, and by being cheap, we look to long the markets. Okay. Yes. Now, on our last episode, I think we did establish and yes, we did set up our charts, and specifically using the TradingView. And so if you haven't set up your charts, please go back and watch episode 2 where we discussed on how we established we opened the TradingView platform and in our own charts. Okay. And for that reason, yes, we continue, and you can see that this is, when we talk about price action, this is exactly what we mean. Just the price, nothing else. Okay. And you can see that this is the chart without any labels, just the price action. And it is through labeling the price action that we identify the supply zones and demand zones from which we look to capitalize on. Okay. Yes. And moving forward, yes, this is now the chart with labels. Okay. You can pause and look at it. We normally, yes, I don't want to dive so deep, but these are just sequence of supplies, demands, supply, demand, supply, demand. Okay. Supply, demand, supply, demand. Price shifted, supply, demand, supply, demand. A deep retracement, you can see that price shifted to the upside and again continue to the downside. And so this is now price action when labeled. Okay. And it is through these labels we identify where the price is being oversold and where the price is being overbought, so that we can sell. And when it is being overbought, we do the opposite. Okay. Yes. Moving forward, what is the market structure? The backbone of the market. Well, market structure in simple layman terms, it is the breathing pattern of the markets. Okay. I believe it is the strongest foundation of every trader. Even if you don't trade market structure, still you need to understand, because it shows you who is in overall control, be it buyers or sellers, and what the trend is. The market is usually in one of two states. Either it is trending or consolidating. And when it is trending, it's either it is in either in uptrend or downtrend. And when it's consolidating, we can have either ranging markets, consolidation, or directional. Okay. And our first job as a trader is to identify the trend and state of the market. or in other words, we identify the direction to which the price is moving from. Is it moving up, or is it moving down, or is the market just consolidating in a directionless area? That is what consolidating, in other words, it means. Okay, now let's see how this is all done. Market structure masterclass. Market structure manifests in the form of structural patterns. For a bullish trend or an uptrend, we have higher highs and higher lows. And for a bearish trend or downtrend, we have lower lows or highs. The golden rule: an established trend is more likely to continue than to reverse. And for that reason, we look to capitalize on the continuation of that trend. Okay? Yes. Now let's put this into diagrams for better understanding. Yes. Now this is an uptrend dynamics. An uptrend is often defined as market structure that is breaking the highs and maintaining the lows. The previous last high or higher high should always be broken, while the previous low or higher low should not be broken. Okay? The higher low is only confirmed when the previous high or higher high is broken. Now, once the price printed this high, we now anticipate that the price will move lower and form a new higher low. But on this retracement, we don't anticipate, the price should never go beyond this low. And by printing a sequence of higher highs, higher lows, higher highs, higher lows, that is what we mean. Okay? Market structure that is breaking the highs and maintaining the lows. The lows, these are the lows here. Okay? The lows should always be maintained when we are on a high on an uptrend. And and all these lows or higher lows can only be confirmed by the break of previous high. Now the break of this previous high is what we call break of structure. Okay, and yes, this is an example of an uptrend. And an uptrend is characterized by a sequence of higher highs, higher lows, higher highs, higher lows. And in no time should the higher low be broken. For instance, if this higher low broke this, now the price has shifted. Okay, and there is still an argument there, but in simple, yes, for now, just stick with this golden rule. Okay, the previous lows should always be maintained, and the previous highs or higher highs should always be broken. And yes, moving forward, now let's look at an uptrend dynamics. And in reality, it's not as simple as the schematic. That is correct, and that's why I said earlier it is up for debate. Okay, a real price action is going to look something like this, because usually the price will never go in a straight line. Okay, the price never moves in a straight line. It moves in sequence of lows and highs, higher lows, higher highs, higher lows, higher highs. Okay, and once a high has been established, a correction to form a higher low will also come with a characterization of the opposite of an uptrend, which will be the lower lows and lower highs, lower lows, lower highs, to establish that correction and form the higher low. Okay, this chart is the same chart, but you will find that if this was an hourly time frame on this range, okay, on this range or on this impulsive move, you will find that on lower time frame we're going to have something like this, because the price never travels in straight line. Okay, yes, and when we have established the higher high, the high, now the correction to form the higher low, the higher time frame will look like this on the lower time frame. Okay, and that doesn't mean the trend has changed. It is just the order flow on the lower time frame, and we are going to cement that when we move. Okay, yes, after we form this higher low, we broke structure. Okay, we broke structure. By breaking structure, we mean that we broke the last higher high. Okay, broke what? Last higher high. And by breaking this higher high, we have now formed a new higher high. Okay, and after every higher high, we will always have a correction. Yes, a correction to form a new higher low. And this is where we look to capitalizing. Uptrend, we only look to buy. Okay, and we only look to buy on the higher low. Okay, yes, and that's it. And after, you can see that after price corrected and this higher low, you can see that the lower time frame shifted, break structure, and break previous higher high to form a new higher high. Okay, after every higher high, we'll have a correction and form a new higher low. And as usual, we form a higher low, we break structure and form a new higher high. And that's it on the uptrend, the dynamics of an uptrend. Please, if you have any question, feel free to shoot your question. I will make sure that I look in the questions and see what I can do to make you better understand. Okay, yes, now in reality is not as simple as the schematic we draw. Real price action is going to look something like this. Like I said, this is the external structure. Okay, external structure, and anything correcting here, correcting in this range, will be what? An internal structure. Okay, and we look to capitalize on this internal structure to form a new external structure. Okay, so an external structure will look something yes, an external structure in this sense will be a structure from a higher time frame. For example, this whole leg can be a structure of 4 hour, and we are going to see that moving forward. And this internal structure will be on lower time frame, something like 15 minutes or 1 hour time frame. And yes, it is on this internal structure we look to capitalize by either entering on this low and positioning our stop losses down here to target these highs, okay? Or we wait for an internal break of structure, okay? These are all structure, but these are internal structure. And so just for confirmation and better confidence, we can always wait for an internal structure and capitalize. We are going to learn more about the future. Okay, just bear in mind that whenever we break structure to the upside or we break structure to the downside, whatever when price retraces back inside that structure, whatever happens inside there, we call that an internal structure, and mostly internal structure will be clearly visible on the lower time frame. Okay, yes, and you can see that after forming this higher low, formed a higher high, higher low, break of structure forming another higher high, higher low structure, other higher low in structure, break of structure, and for another higher high. And that's it on the uptrends dynamics. Okay. Yes. Now this is what a real uptrend example will look like. Okay. Yes. Break of structure. You can see that. Let's take this break of structure. Yes. They're all internal. Yes. Break of structure. Trace. Okay. And you can see that I took this break of structure and didn't take this break of structure because this is all an internal, because you can see that it retraced back here before breaking structure to the side. Okay. And between this and this is all internal structure. Okay. And one can say that this is another break of structure, but you've learned that we can have several internal structure before we break the overall structure to the upside. Okay. Yes. Moving forward, downtrend dynamics. Downtrend is defined as market structure that is breaking the lows and maintaining the highs. Exactly vice versa, what is an uptrend? Breaking the low and maintaining the highs. This is the high. You can see that once we printed this low, the price retraced back inside inside to form an internal structure, but this low or this high does not break the previous high. Okay, meaning that this is now a lower high, and this lower high can only be confirmed by a break of structure. Yes, this lower high can only be confirmed by a break of previous low or lower low. Okay, and you can see that lower high, this is now a lower high once we break this low, and once we broke this low, we printed a lower low, retrace back internally and form a new lower high for breaking structure and forming a new lower low. Yes, after forming a new lower low, as usual, we'll have to retrace or expect at least to give the price a opportunity for with a new lower high, and this lower high can only be confirmed by a break of structure of the lower low. Okay, I think you can pause this for better understanding. And the golden rule here is that a downtrend is characterized by a sequence of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. The golden rule of the downtrend dynamic is that the lower high can only be confirmed by a break of structure of the lower low or the previous lower low. Okay. Yes. Moving forward. Yes. Again, it goes without saying. Yes. Again. Yes. Again, if we pay attention to this chart, you can see that after forming this lower high, and the lower high can only be confirmed by a break of structure of the previous lower low. Okay. Now you can see that we had a correction, and that correction, whatever is inside that correction, we take that as an internal structure. Okay. And when we are going to form a new lower high, you are going to have a shift of order flow form a sequence of higher highs and higher lows for the correction to materialize before we shift again and complete and break structure to the downside and complete the formation of the new lower low. Lower high. Okay. Yes. And just like mentioned earlier, the golden rule is that every lower high can only be confirmed by a break of structure, the previous lower low. Okay. You can see that this is now a lower high and that has been confirmed by a break of structure of the previous lower low. Okay. And as usual, whatever comes inside that previous lower high and lower low is all an internal structure. Okay. Yes. And you can see that price didn't really shifted the order flow completely on this lower low, and that's because price does what it does. And so we become, as traders, we have to be flexible and follow what the price does. Okay. And as usual, after forming a low, and as usual, the lower high will only be formed by a break of structure of the previous lower low. And that is continuation of the same pattern or sequence. Yes, now this is an example of a real downtrend. Okay. This is a lower low, lower high. Break of structure. A break of structure now confirms the lower high. Lower low, lower high. Break of structure. Okay. Lower low. Lower low, lower high. Break of structure. Print a new lower low, lower high. Break of structure. We print a new lower low. This is the final low. This is now a lower high, lower low, lower high, break of structure, lower low, lower high, break of structure, lower low, lower high, break of structure. And that is the sequence of lower lows and lower highs, and an example of a real downtrend. Okay. Yes. Now let's talk of consolidation. A consolidation is a market structure that is failing to break both the highs and or is just weakening them. Consolidation is a balanced price action, meaning that the price found equilibrium and a fair value, and that's why it dangles around that price. Okay, it is extremely important because that's where BFIs or big financial institutions are stacking orders and preparing for the next big move. See consolidations, BFIs are cooking. That is a note for you as a trader. If you study the charts, you'll see how before and after every big move, there is always consolidation. So, an example of consolidation. Price is forming equal highs and equal lows. Okay, failing to break the resistance area and the support area, meaning that the price has found equilibrium in this zone. Okay. Yes. Now, a higher time frame consolidation can have multiple short-term trends. Okay. Remember, the market is fact. There are trends within the trend. Yes. If you look carefully, the chart that we have is just it's completely the same as this. Okay, but with this chart here, we've put market structure inside the consolidation. Okay, you can see that this is the same support zone and this is the same resistance zone. Okay, and before prices reaches that resistance zone, you can see that we have sequence of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and the last higher high before we get any resistance is our zone. Okay, that's what we mean when we say that a higher time frame consolidation, okay, can have multiple short-term trends. And just to cement that, we can say that this can be, let's say, 4-hour time frame, and for that reason, the 4-hour time frame is consolidating. Okay, but when we go to the lower time frames, specifically, let's say when we go to 15 minutes time frame, you are going to see that inside those inside that consolidation, there is small or lower time frame market structures. Okay, and that's what we mean when we say that a higher time frame consolidation can have multiple short-term trends. Okay, you can see that this was an uptrend before it shifted to a downtrend, and again from a downtrend it shifts to an uptrend, consolidation before shifting again to an uptrend, before again shifting to before again shifting to a downtrend. That's what we mean. We say the higher time frame consolidation can have a multiple short-term trends. Remember, the market is fractal and there are trends within trends. Yes. Now, let's train your eyes at least for this episode. This is just a raw price action. But tell me, what do you see in this price? You can just pause your video in order to have ample time to see. Yes. Continuing, so you can see that price was in a consolidation here, and price broke out of that consolidation and started a downtrend. Okay, we said what a downtrend. What did we mention on the dynamics of downtrend? Downtrend is characterized by a sequence of lower lows, lower highs, lower lows, lower highs. Okay, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And this was an downtrend. And again, when we got to this level, the price shifted into an uptrend. You can see here. And when it got to this level, it reached an equilibrium and it started to do what? Consolidate. But in this consolidation, you can see that we on the lower time frame, we have these short-term trend, section, trend, other uptrend. We enter a consolidation. We drive impulsively an uptrend. Again, we enter into a downtrend. So we continue with a macro driven uptrend. Okay, and again, last but not least, we enter another consolidation. This is exactly how the markets behave, and this is exactly what we should anticipate. Okay, markets will the market will not always trend. Okay, market trend over 70% of the time, and over 30% time the market consolidate. And so after every consolidation, expect a trend, probably a continuation of a trend before entering macro consolidation, breaking out of that consolidation with a trend, continuing another trend before entering a consolidation. So we will have always a sequence of uptrends, downtrends combined with consolidation. That's how the price will move. Yes, let me not complicate it any further. Let's take as it is for now. Okay. Yes, moving forward, now you can see that we have a real consolidation here. Price never breached outside this resistance zone, and you can see that when it breached, it was forced back inside here and never left ever since. And again, when price reached here, you can see that it reached a support zone, and when it broke, this is what we call weak. When it broke, it was forced back inside. Okay, and yes, this is some type of consolidation. And you can see that still in this consolidation, we have this some form of uptrend before starting a consolidation, continuing the uptrend, or shifting to downtrend, a short term internal downtrend. Okay, never forget that. Yes, moving forward, you can see this is now a very choppy market where we have no sense of direction, and you can see that we are in a consolidation within a, this is a consolidation within a consolidation within a bigger consolidation. Now that's how prices normally be. Yes, fellow traders, I think that's it for today's class, and I think we've had enough for today. And just to remind you, today we've learned about the market structure, and the market structure as the breathing pattern of the market, and that we have in any market you'll always have a trendy market or a consolidating market. And when it comes to a trendy market, we will have either an uptrend or a downtrend, and we've looked at the dynamics of uptrend and the dynamics of a downtrend. Last but not least, we've also dissected the consolidation and the dynamics of markets consolidation, and we also got to see how the markets alternate between these three phases, either an uptrend to a downtrend to a consolidation, or from an uptrend to a downtrend before a consolidation, before a continuation with an uptrend. And so as traders, we have to be flexible and follow what the market say. Yes, and for anyone who is new in this channel, this is Traders Hub YouTube channel where we post trading educational content and weekly technical analysis. With you is none other Ali Mathman, head trader at Traders Hub. Please don't forget to hit the subscribe button and hit the notification button so that you get notified whenever we post this educational content for your own benefit. Please feel free to ask any question and feel free if there is any concept that you think we need to delve deeper and dissect it further. I'll take my time and do that. Without wasting any time, please see you next time. Ciao.